Good morning. Ready to get up to speed on today's top stories? Two major headlines are shaking up the financial world. One reveals how fast fortunes can change. The other surprises even the experts. What happened and why does it matter? Stay tuned as we break down both stories you need to know right now. Personality power shakeup sends shockwaves through speculative markets. A public split between Donald Trump and Elon Musk has sent ripples through the world of personality-driven investing, exposing the risks of tying financial bets to high-profile figures. As their feud escalated, assets linked to both men saw sharp declines. Dogecoin dropped 10%, a SpaceX focus fund fell 13%, and leveraged investments in Musk-related ventures lost over 20% of their value. Shares of Trump's media company also slid. The dispute was triggered by a tax bill threatening Tesla's electric vehicle subsidies. By Friday, tensions eased and markets stabilized, but investors were reminded how quickly fortunes can shift in crowded trades tied to celebrity entrepreneurs. "You can be a big winner one moment and take a hit the next," said Peter Atwater of Financial Insights. While major indexes like the S&P 500 rose during the week, those betting on personalities faced volatility. The trend of speculative products, from meme coins to ETFs focused on single stocks, has grown rapidly, attracting retail traders eager for quick gains. Experts warn that this surge in high-risk, narrative-driven investments challenges traditional ideas about rational capital allocation. S&P 500 keeps lineup. Steady in latest quarterly review. The S&P Dow Jones Indices announced on Friday that there will be no changes to the S&P 500 membership following its latest quarterly rebalancing. This decision came as a surprise to some analysts, who had predicted new additions to the index. Robinhood Markets Inc. saw its shares rise by about 13% earlier in the week after speculation from firms like Bank of America and Barclays suggested it was a strong contender for inclusion. However, Robinhood stock fell 5% in after-hours trading once the unchanged lineup was confirmed. To qualify for the S&P 500, companies must meet strict criteria, including a market capitalization of at least $20.5 billion, as well as profitability, liquidity, and share float requirements based on the methodology updated in March. Being added to the index can boost a company's visibility and attract investment from passive funds, while removal often leads to stock sell-offs as index funds adjust their holdings. In the previous quarterly update, DoorDash, Williams-Sonoma, TKO Group Holdings, and Expand Energy joined the S&P 500. Before you go, tell us, what's your take on today's news? Share your thoughts in the comments. Don't forget to like, subscribe, and share this video if you found it helpful. You're watching Finance Daily Reports, your source for global finance and politics. See you soon and have a nice day.